Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, we have great timing this week as Calgary, Vancouver, Toronto, all the markets you've addressed here over the last few months, and asked our listeners to check the stats that have been posted for the monthly results. What do you think of the results released in the last 3 days? I think claiming that sales are way up.
Oh, it is just hilarious to watch, isn't it, Jim? It is just, well, I guess tragic in many ways too. The news headlines that we've been reading the last couple of days. I mean, it's so perfect with what we've been talking about in the show since back in May. And any of the listeners who really cared to find the fact are able to go back there and fact check everything we've said in the show here the last few months, and they've been able to analyze what everybody else has had to say and decide who's been telling the truth. If we look at the numbers in those three cities in particular, so we don't have to go to other cities. We'll just go to those three cities, and we'll speak only about the real estate, organized real estate, the realtors who are working at the real estate boards of the Calgary Real Estate Board, the Vancouver Real Estate, the Real Estate Board of Greater Vancouver, and the Toronto Real Estate Board, who are now trying to call themselves Greater Toronto Area Realtors, ignoring the other trademark licensees who are working in the GTA, by the way. It's just hilarious. That said, what your listeners can now do is they can go back to May of this year, and they can see every single sale that we have told you was going to appear. Now, it's going to take a little work, folks. What you're going to have to do is you're going to have to go to those individual real estate boards and download their sales stat from May through till October. Now, first of all, remember, we're still counting October sales. So at Ross K Realty Consultants, we won't even stop counting October sales until the middle of November. But that's beside the point. Let's talk about the real estate stat. Let's hear about all the nonsense you've heard and read. If you look at the stat from May forward, what I want you to do is this. Simply assume in the month of May, that was the first month that local market turned around. We're not going to get into the weeds here. We're not going to explain to you why there's certain times of the month you need to take these readings. We're going to actually tell you to use the stat, because very rarely do the stats allow you to do this kind of analysis on your own. I have never seen it when three real estate boards from across Canada give you this opportunity, but they do. If you look at the sales stat back in May, you're going to see an increase in sales. Now, all I want you to do is make this assumption. If 100 new first-time buyers enter a market, there is going to be a series of sales that take place, which we call the sales chain, in the following month. In other words, first-time buyers buy a house for $100,000. The owners from that $100,000 house go out and buy another house for $200,000. The owner of that $200,000 house is then able to go out and buy a $300,000 house. In this example, people are only going to have a $100,000 bigger mortgage, whether you were the first-time buyer or the final trade-up buyer, because we're only talking about a $100,000 increase. Of course, that never happens. But what does happen is what's called the multiplicity of sales, or the law of the multiplicity of sales. And what that means is, for each new entrant into a housing market, there is going to be a series of sales that take place as a consequence of that initial acquisition. If when your listeners look at maybe in one of these three cities, let's say they look at June and they see that May sales were up 1,000, but June sales were only up 700. What I will tell your listeners is this. I would expect then in July to see a grand total of the 1,000 gain from May plus the 300 that weren't reported in June, or 1,300 additional sales. I want your listeners to go at all of those months at those individual real estate boards and see how that exact pattern has been followed from May through till October. Everything that we've talked about on this show since the very first time you interviewed me, Jim, is being proven true with those three data sets from those three major real estate boards over the May to October period. Because those sales are so close on that patterning, they're within a margin of error. And your listeners have to understand, you're looking at unadjusted sales. You're looking at stats released by Organized Real Estate. You're not reading the data the way that we read it and adjust for it. Because when we make our adjustment, in other words, we take our reading for October, the month of October, in the middle of November, our numbers line up precisely. And any shortfall or surplus that we see reported in this October from the May to October selling window, we know we're going to see in the month of November. Organized Real Estate gets a boost for 4 months because when there's an increase of first-time buyers entering the market. There is never a consistent measure of first-time buyers entering the market. It is always changing. Now, it is cyclical in nature, not in a calendar year, but it never is the same month to month. Meaning, if there were 100 extra first-time buyers buying in 1 month, you would expect to look in the sales stack and see a group of sales in the lower priced home increase that month. Depending on where the following months had reported, when you average the rest of the home buyers, what they had spent, you could have a large house price gain or a small house price gain reported in the stat, when in fact home prices did not change a penny. Home prices can actually be decreasing at the same time that the average selling price is increasing, which is what is happening in the Greater Toronto market in the month of October. Toronto did not have a 5.5% increase in average selling price in October, folks. The 45% house price gain bragged about in Vancouver actually was a consequence of a few extra first-time buyers entering the market way back in May and June. And then the multiplicity of sales took over. It allowed real estate boards and realtors and amateur housing analysts to suggest your housing market is the demand and supply and demand is magically changing again. I watched BNN Bloomberg today. Great people. You have Amber on there, and she's asking Greg Bunnell, Greg, Amber's out looking for a house in the GTA. She says, but Greg, I know you're saying house prices are increasing, but we're out there looking and we're seeing house prices are being decreased by the sellers. Greg can't answer the question because what Amber is saying is true. Housing prices are falling. Greg has a news report in front of him from the real estate board that said housing prices have increased 5%. She's looking at it real live, and he's reporting the stat. Why? Because there has been a shift in sales in the Greater Toronto area this October, because again, remember folks, housing markets are not based on a calendar year. They do not follow the same pattern year after year after year, and you only need to look at the stats to see it. If you look at the stat from the Toronto Real Estate Board, this October and last October, you are going to see a huge shift in the share of sales going to homes priced under $500,000. In other words, home buyers purchasing homes for below $500,000. There is a radical change between those 2 months, which had a corresponding radical change in the average selling price. This is how Amber is out looking, house shopping in the GTA, seeing prices falling. At the same time, her reporting mate at BNN is reporting prices have increased. The public is so deceived in this, Jim. It's just that it's rare that they're going to get a chance if they want to take the time to find out the truth. Right now, those 3 real estate boards from May through October, the data is live. The stats are live on their website. You can go in and you can see the multiplicity of sales to perfection. What is being recorded in October is a consequence of purchase decisions being made by first-time buyers in May and June. Even the most incompetent housing in should have been able to forecast rising sales in September, October, after reading first-time buyers had increased in May and June. Go out and try to find a news report where that was reported, a podcast where that was reported, a report where that was reported. Find one. It doesn't exist. Your listeners are not stupid, Jim. They can go and download the sheets themselves. They can download last year's reports and this year's reports. They can compare the difference in each month, and between May and October, they're going to see by the time you get to the end of report of October with what was reported this week, it will be 0. In other words, the sales gains recorded at the start of this period will be the exact same number of sales reported at the end. There is a corresponding change in what the average purchase price paid was. It had nothing to do with home prices. It had to do with the homes that were being purchased. You have been conned. You have been misled. All of these people you're listening to cannot argue against the stats you now have available to you recorded in public. It is very rare where you're going to get these periods of time with the 3 of the largest real estate boards in Canada where you can go in and see the nonsense live. You can do that now. Folks, it wasn't a 45% busier housing market in Vancouver in October. It was a 45% busier housing market way back in May and June. The multiplicity of sales through the sales chain, it simply took that long for that wave of housing activity to follow through. Same in Toronto, same in Calgary. I mean, Calgary's precision, as we've talked about in the show, has just been amazing because there was not even a lot of the month-to-month variation. In other words, if, we're missing 40 sales in June, and then in July, there's the extra 40 sales. In Calgary, that was almost not even neat. So, no, folks, home prices in the GTA year over year in October for the identical home have dropped. I don't care what the benchmark says. I don't care what the Toronto Real Estate Board says. I don't care what Organized Real Estate says. I don't care what has been reported in the news. It is fake news. It is a false narrative. It is using a metric that was never designed to be released in this manner. It's called the average purchase price paid. It is not called the average selling price. It is not called the benchmark price. It is not called the average MLS price. It's called the average purchase price paid. It's measuring the leverage ability of a group of buyers active in the market. It's naturally inflationary because of the multiplicity of sales. You can check it yourself. I challenge you to do so.
We'll have more with Ross Kay right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ross Kay. Ross, we hear about home buyers not having a lot of homes to choose from in some markets. Does that really mean it's a seller's market in those areas?
We've been listening to some realtors again, right? Here we go again. Demand and supply. Oh, it's demand and supply. Hogwash. Nonsense. You're being conned. Understand this, list. Demand is determined by one thing and one thing alone: first-time buyers. There is never a continual flow of first-time buyers into a housing market. That's not human behavior. What happens is a group of home buyers, first-time buyers, gradually builds in the weeds, in the sidelines. They grow and grow until there are buying signals that are released by the market. Those buying signals could be fear of missing out. They could be a drop in mortgage interest rates. They could be a surge of lower-priced homes coming on the market. There's many different factors. There could be a bonus added to the market, as people in Vancouver had in 2017 when you had your condo bonus come out. That unleashed those first-time buyers into the market. Then, over a period of time, generally speaking 2 years, that group of buyers is exhausted. In other words, it's not a constant flow. They come into the market irregularly over that period of time, and that sets off a series of transactions in the market which alter the average selling price reported by organized real estate, which is why it's the average purchase price paid. We've got an example of that right now. It is not a supply and demand function that is causing your prices to change in any 3 to 4 month period. House prices do not change in a 3 to 4 month period. Not only is it illegal, in other words, an appraiser could not appraise a house at 2 different prices over that period of time. It just simply doesn't happen. What happens over that period of time, though, is illusion. The illusion of gain, because of the way organized real estate reports their stats, and because the way every economist in the world believes these stats to be true. Now, they can go check the last 6 months of data at those 3 real estate boards and be proven that it's false. You would have to have the underlying understanding of the market to corroborate that, but it's possible. It's the supply and demand myth is a myth. If there was not enough first-time buyer homes active on the market, then that would put upward pressure on first-time buyer homes. That upward pressure, by the way, is naturally inflationary with each subsequent trade that takes place. With each subsequent trade that takes place, there is far more pressure. So, and again, which gets reported as house price inflation. What you're looking at with the supply and demand myth being perpetuated by organized real estate and realtors across Canada today, it's a falsehood. We measure what's called the national listing rate. Okay, we have measured that number for decades. We measure it regionally, locally, categorically. In other words, categories of homes. The national listing rate on November the 1st, 2019, was at a record low. That did not mean that there was demand exceeding supply. What it meant was future demand is going to be below historical norm. The national listing rate is a metric that determines the fear in the market. How confident are Canadian homeowners that they're willing to list their home for sale in preparation of trading up to their next house? That's all that metric measures. It is a primary metric of any housing market. It needs to be categorically separated for each municipal and regional market that you're overseeing. But this is a true metric of a housing market. On November the 1st, 2019, there were approximately 12,000 listings removed from the MLS system in Canada. It was replaced with about a new 8,000 in that one day. It reached a low of around 188,000 listings. That meant only 188,000 homeowners in Canada were planning on moving. That was a historical low because we measure this as a rate, not as a number. That meant the fear of Canadian homeowners is reached a point never before measured since 1980. I don't have data from before 1980, so I can't comment about a depression or some period of time prior to that. I can only comment from 1980 forward. And in that period of time, there has never been a time where Canadian homeowners were this fearful that they are not listing their homes for sale. That is a red flag, folks. It means that future sales cannot continue to increase. They're going to have to drop off. There simply is not enough activity in the marketplace to sustain it when you only have 188,000 houses listed for sale. But that number doesn't appear published anywhere. You can't find it. Historical data you can't find. We listened to the Toronto Real Estate Board, and again, I'll go back to BNN's interview today, where Amber is saying, but Greg, I'm seeing house prices dropping in price, and Greg is saying, well, they're up 5.5%. No, that's not true. There was actually, if that was true, then listen to this metric, folks. There were over 8,000 homes removed from the market in October in Toronto that did not sell. There were only 8,000 homes that actually sold. So there were almost as many homes removed from the market that didn't sell than actually sold. Yet Greg is on BNN today reporting that inventory's down. Of course it's down. People can't sell their homes. They're taking them off the market. Nobody measures that. Why does nobody measure that? Because it's against the MLS rules and regulations to measure it. The MLS rules and regulations are designed under a seller representation business model. They are not designed to represent buyers. And as such, those numbers, it is illegal for anyone at illegal meaning. You are not licensed to report what I just reported to you here on the air. So Greg Bennell is reporting there's a supply and demand pressure, and that listing inventory, active inventory, had dropped 20%. And we're sitting here laughing. Of course they dropped 20%. They took 8,000 homes off the market. Only 8,000 homes sold. That means 8,000 homes were taken off the market that didn't sell. Of course you don't see them any longer. That means there's downward price pressure on those existing homes that are there. It means that failed sellers are setting the example for new sellers that they have to adjust their price downward. Regardless that if the average purchase price increases because the buyers are technically wealthier in a given month, the group of buyers active in that month are wealthier, heavily weighted towards trade-up buyers for the sake of the argument, it's irrelevant to your supply and demand discussion. What we're looking at here today is a historical national listing rate in Canada, historically low. That means one thing and one thing only. Canadian homeowners are fearful. They are afraid to list their home for sale because they are afraid to buy their next. They don't know what's happening with the economy. They know there's something wrong. They can't listen to the news reports and see what's actually happening in their lives and having it align. Why are retail stores empty? Why are restaurants empty? Why is this going on, yet they're claiming the economy is still getting better? There's something drastically wrong in their field of view. As a result, they won't list their home for sale. They will not plan on moving. They won't move. The supply and demand nonsense that has been force-fed in the Canadian public by organized real estate boards, real estate brokers, realtors, is nonsense. It is a falsehood. It is demonstrably provable as being a fraudulent statement. The reason why I get to say what I say here on the show, Jim, is because I can prove everything that I say. The reason why the real estate boards are not coming after me is because I can prove what I can say. And that would force them to expose, show their hand of cards to the Canadian public. It is a falsehood. The national listing rate is at a record low as of November the 1st. It's still at a record low as of this morning. Canadian homeowners are just frozen in spot. They are not listing their homes for sale because there is something happening in the economy that they know is going on. And no matter what they read in the papers, no matter what everybody's telling them, they know there's something wrong. And that's what we're seeing today.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, just this week, over 130 journalists reported about lead in Canadian drinking water, an issue we brought up over a year ago, by the way. How can homebuyers protect themselves and their families from this high-risk concern, seeing as how the government doesn't seem to care that much about it?
Oh, yeah, I think you guys did do something about that on the show before, Jim.
And the city of White Rock fought in court to keep the toxic results from being released. And
there you go.
And what's that all about?
Right. So let me tell something to your listeners, okay? I and my family sold thousands of homes to thousands of families. Not once did any of our clients purchase a home that had lead contamination in their drinking water. Not one of those people purchased a home that had asbestos in their attic, undisclosed. Not one of those people purchased a home with mold in the house. When I read that report yesterday, Jim, I'm really glad you brought that up. When I read that report, I couldn't believe it. It's 2019. What that means is there is over 30 years of instruction by lawyers in court cases directing real estate agents to ensure their clients are protected. Now, I'm only going to focus on the 2002 forward period. It is impossible for a home buyer working with a realtor from 2002 forward not to be able to have every single penny repaid to them by their realtor if they purchased a home which subsequently was found to be faulty. Realtors were given instructions. Court cases had resulted. There was training given in every real estate board across Canada that for telltale signs that there was a potential for lead contamination of the drinking water coming in from the street. Even if the home you own had been retrofit, all of the lead pipes had been pulled out and copper had been installed, you still had been educated and informed to do the next test, which was a water test if the house was built pre-1965. Now, I understand that it's 1950s when they stopped being used. I'm just telling you what the practice was. What we heard in the news yesterday, it was staggering the number of journalists that reported on this. And like you said, Jim, you guys had talked about this last year in BC, is the incompetence of the realtors. The reason why we have a buyer program, the reason we have a buyer program is specifically for this reason. There is no reason for you to buy a home and subsequently find out you're killing your kids. You're affecting their brain development. They're breathing unhealthy air. The neighbors it was a grow up. There is no need for that any longer. Those issues were resolved years ago. The only reason that they are happening, and you're reading these reports, is because realtors failed to do their job. Nothing more, nothing less. Anyone who acquired a home after 2002 who is now finding out that there's a problem of any sort, health-wise, with their home, should sue their realtor. You don't even have to make a big deal about it. All you have to do is threaten it. And you're going to threaten that you're going to call the provincial regulator. And what the realtor is going to do, the brokerage, is they're going to refund you any damages. Certainly they're going to refund you your full commission that they were paid. There's not a house in Canada that's sold where there's commission payable that would not fund replacing the lead pipes coming in from the city. There's no need for people to have to pay it. It was the realtor's responsibility to ensure the home buyers were protected. When you're buying a home, listeners, when you're buying a home, it's not as simple as what organized real estate wants to make it out to be. They want to make it out to be simple and fun and exciting or fearful so that they keep control of the process, so they can't be held accountable. You need to hold them accountable. You need to protect your interests. You don't need to find out later that the water your kids are drinking is contaminated. You don't need to find out later that the bedroom your child has been sleeping in has a mold problem. You don't need to be hearing later that the retirement home you moved your mother into has asbestos. You don't need to hear those things. The only reason they happen is because organized real estate does not want to live up to the standards that the courts demand of them. We demand that standard be followed. We know the rules and regulations. We know the tells that are out there in a listing that signal a problem for the home buyer. Every single listing that we look at, there are tells in that listing that could set off red flags. We know those things. Because we're not members of organized real estate, we get to tell you about it. This lead issue is a prime example. There was no need for a single child in this country to be suffering from what they're going to have for the rest of their life as a consequence of lead poisoning.
Ross, a listener asked, how can you guarantee to time the real estate market and back it up with cash?
Yeah, well, we do, right? If we're wrong, if you're wrong, you don't pay us anything. So for us, it's really quite simple. If we're wrong, you don't pay us anything. If we're right, you don't pay us anything either. I mean, it's kind of a double whammy for us. I guess what the difference is that how much money do we have in our pockets at the end of the day, or how much money are we doing? How can we do this? If your listeners listen to today's show, and you go back and you check that 6 months of housing data, then you go back and listen to the 6 months of shows, you're going to know why we can do it. Because it's this simple for us. We understand the world is not flat. The world is round. We don't care if there are 100,000 scientists out there saying that the world is flat. We know it's round. This is how we view the housing market. We know the housing market is nothing the way that it's presented to the Canadian public. We understand the housing market is structured to the benefit of real estate stakeholders. That means real estate brokers and bankers. That's how the real estate market is structured. It's structured to get the highest price possible in the shortest period of time. It is not structured to get the lowest price possible, no matter how long it takes. The reason why we are right, and the reason why we can guarantee that we're right, is because we can't be wrong. 1 and 1 equals 2. 2 and 2 equals 4. The world is round. The world isn't flat. That's how simple housing markets are to us. Now, I understand the rest of the world doesn't understand this. The reason why we can make a guarantee, the reason why we can guarantee our programs don't cost anything is because they're not gonna. It's impossible. Barring a nuclear explosion, a world war, which again, by that time, we're not going to really care if we're right or not. We're not going to be wrong. What we do know is this, Jim. People who have taken our advice since the wealthy homeowner started, some people are millions of dollars richer. Not tens of thousands, not hundreds of thousands, millions of dollars. We have high-profile executives in the Vancouver market looking to purchase in the most expensive parts of Vancouver, multi-million-dollar homes, who today, because they didn't purchase in 2016 and the fall of 2015 on our advice, are now millions of dollars wealthier. There are regular Canadian families who are hundreds of thousands of dollars wealthier. There are regular Canadian first-time buyers who are tens of thousands of dollars wealthier. They all were guaranteed. They're all the ones that are actively waiting for the market right now, they're all guaranteed. Why? Because we can't make a mistake. It's impossible. We are going to know months in advance of when the housing market has changed. If we are not measuring enough first-time buyers entering the market this November and this December, we know where the sales are going to be throughout 2020. We are not looking at sales. We are looking at first-time buyers and only first-time buyers. We measure first-time buyers. It's a core metric that powers everything that we say, because we need to know, is it 20% first-time buyers who purchased this month, or was it 40? Because the average selling price is going to be reported by the local real estate board is going to radically be different depending what that percentage of first-time buyers is. When did those first-time buyers enter the market, and how many of the trade-up sales through the multiplicity of sales are now coming home to roost? What price pressure are they going to put on the market this month? Will it offset the share of sales to the first-time buyers, or is it not enough to offset it? When you measure all these things, you put it in a spreadsheet, you use simple multiplication, addition, and division, and you know exactly where you are. If you don't have that spreadsheet, if you don't know how to calculate those different classes of buyers in a given month, you have no idea what I'm talking about. And what we know today is the only company in Canada who guarantees they can time the market is us. We're the only place where that happens. Why? Because it doesn't matter. We can't be wrong. You're always going to know months and months, years and years ahead of time. That's why, Jim.
Ross, thank you so much for being on the show.
Hey, thanks for having me on.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or for the show, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.